Okay, okay. Good morning, trader. Trust you are doing great. Good morning, trader. Trust you are doing great. Today I just want to talk about how you get into a trade with a trading plan. Now, what's a trading plan in the first place? Let's start by defining what's a trading plan. A trading plan, a trading plan are a set of rules that guide you on how you get into a trade and go out of a trade. Okay. Now, when you talk about getting into a trade, it has to do with highly effective preparation. Okay, before you get into a trade. Okay, so you are prepared. You are waiting for some certain rules to be met, so you can be able to get into that trade. Okay, every successful trader has to do what highly effective preparation. So I think that's what basically a trading plan is. A trading plan is simply the basic rules. It should be very simple and very straightforward. Okay, it's not lengthy, it's not supposed to be complicated. Now the first rule we're going to look at is what the break of the counter trend line, which I spoke about in my course. So if you don't understand that, I illustrated here with this diagram, and you wait for the break of the 4 hours candle. Now let me explain what this diagram simply means. Now at the point you've been trading gold, let's say this is gold has been pushing up, test down, push up, test down, push up, and you're just watching. Okay, you remember there's a counter trend line somewhere around down here. Show you how to draw a counter trend line. The moment you want to get into this trade is when price actually pull out and break out from here. And remember, you have to wait for the 4-hour candle to close below here. If the 4-hour candle does not close, it might just simply wick off and keeps a wick, and it's going to be what a fake out. Meanwhile, you've already sold. Okay. Now, when you sell here, where is your stop supposed to go? Your stops are supposed to be above here. Okay, stops are supposed to be above here. Okay, because price could still pull out, come back and test, close you out then before dropping down. Now where is your take profit one supposed to be? It's supposed to be below the over the push to the upside. Let me just show you using some example on the chart. Okay, I think you can understand me here. Or you close what 50% of your profit. When we talk about closing 50% of your profit, what do we mean? Meaning if you open one lot, you're going to close what 50. Okay, you're going to close 0.50 and allow for the rest 50. If you open 10, you're going to close 5 and allow 5 to run. Now another aspect which I always use to hop into the chart, like for more confirmation or more confluences, which is not really part of my trading plan. Let me just add that. We have the fib fib on the PT zone. If you don't understand what the PT zone is, then you have to take some videos behind. PT zone is my zone. I call it the Prince one zone. Whenever price touches the 50 to the 61, I know okay, price is about to start heading downwards. And another confluence is what weak rejections, weak rejections of candlesticks, rejection. I just look out for these things, rejections of candlesticks. Okay, these are the things I look out for. It's not like this. I just look out for these things before I get in. Order block confirmation, order block, order block confirmation. So I'll just illustrate all of that using the chart. Okay, confirmation. Now let's start with PT zone. Okay, let's go into my chart. My charts are not loaded. Anyway, oh la la, how do we do it from here? Okay guys, since the charts are not loaded, we just have to continue. So PT zone, you want to pull out your feet from swing high to swing low to see if a retracement, this one has to do with retracement, to see if a retracement is over. Okay, to see if your retracement is over, if it's in the 50 to the 61. On the previous video I showed you on how you can get into that. I just want to make sure my network should be stable enough so I can look at the chart and show you how you do that. And when we talk about weak rejections, there's this weak candles leave weak rejection, trying to tell that than unable to push higher. It shows you the candlesticks actually even sell the market, like they show you that this market is having lesser power going up. That's why it's keeping those wicks. Guys, sorry for that. My network is really bad. I can't really access the charts. They're all the same. Really cool. Okay, and other block confirmation. Now, before I even get into this trade, I'm talking about my first entry target. I open first position here. Price always tend to come and do this. Okay, price will always do this. Price is always going to come and do this. Let's use red to come down. Price is always going to come and do this. Price is going to use blue to go back. Price is always going to come and push back up a little. Okay, now you see this area somewhere here. This is an order block. This is an order block. Look at this. You see this guy. This is an order block. Price has come to test it. Okay, now when price tests, because anytime price reaches here, it pushed down. Anytime price is here, push down, broke it, came here. Now price will come here to come and test this block and then head downwards. It always does this. So indirectly it has already created a pattern and a head and shoulder. So from this point I'll be watching out. I'll be using my feet now here. This is where I bring in my feet. This is where I bring in my feet. This is where I bring in my weak rejections, because price is obviously going to keep some weak rejections here. And this is why I use the other block confirmation. Okay, so when I draw my other block, I will see that price is actually going to respect this zone. This is when I was up in my second position. I remember I already shot the market somewhere here. My stops are above here. Okay, now when the market actually pulls up, I want to start heading lower. I use my feet from swing high to swing low. It's going to fall in between the 50 to the 61. I'm going to see some weak rejections, and it has tested another block. I shot the market here. When I start see it going down, I shot the market here. Oh, for me to be more clear, I draw a term counter trend line like this. When the market break, I shot it somewhere around here. My stops are not going to be here. Remember, my stops are going to be still up here, because I'd have shot these two markets somewhere around here already. But I just want to keep one position to be very sure that the market is actually heading down. Okay, and the market is going to make me all of this profit. So guys, this is how you build your trading plan. Now when it goes down to risks, I advise my students to risk 3% of their account. Meanwhile, it's not when you talk about risk has to just do with what you're comfortable losing. Okay, a lot of people misconcept this idea of risk. If I'm willing to risk $50,000, okay, it doesn't really matter. It all boils down to my goals and my level of what I actually really want out of the chart. It's okay. So it must be calculated. Okay, you must know what you're risking. Like if you're entering here, make sure that 3% is worth this amount of money and you're okay losing. Okay, so 3% of your entire account is just like giving you an overall guide. But if you say you want to risk 50% of your account out of your $1,000 account, meaning you're risking how much? You're risking $500. No problem. It all boils down to you. If you're okay with you losing that amount of money and you know it's not going to disturb your health or emotional wise, then fine, you can risk that. So I hope I've been able to illustrate how I get into a trade and how I exit a trade. Okay, I exit a trade how I get into a trade and how I exit the trade. So guys, you want to look out to copy this, emulate this same strategy on how you get into a trade. There'll be a part 2 on how I get into a trade using the boxing strategy, which I've explained using the video. Okay, so see you guys, take care.